Good evening. Well, systematic greed, systemic failure, like an epitaph to an age of irresponsibility. Just a few of the comments on the latest evidence of crass and potentially illegal activity in the banking system. With calls for the head of Barclays, Bob Diamond, to resign, where will this new banking crisis lead? And while they promised a bottle of Bollinger for their mates, how much more will the taxpayer tolerate? We begin tonight with our economics editor, Paul Mason, and Bob Diamond's first public response in a letter to the chairman of a Commons committee that wants to hear from him. What did Mr. Diamond have to say?
Well, Gavin, Bob Diamond refers to two things that Barclays did in manipulating this key interest rate, the LIBOR. They did it for one reason, which was to enrich themselves, which was to boost their own trades. And Diamond says, look, this was done by junior people. We've collaborated with the inquiry. Let's get on with it. The Serious Fraud Office can do what they want. We're sorry. We've taken the fine. Then he refers to the second reason. The second reason was that this interest rate is a good barometer for the financial health of banks. And at one point between 2007 and 2009, Barclays were coming out of the daily interest rate setting looking bad. It looked like they were a bank in trouble. And therefore, the senior management expressed their concerns. This is what the Financial Services Authority had to say yesterday. Senior management concerns resulted in instructions being given by less senior managers to reduce the LIBOR submissions, that's fiddle the rate. The origin of these instructions is unclear. And in today's letter, Mr. Diamond says, I accept that the decision to lower submissions was wrong. Now, he also intimates that that decision was discussed with the Bank of England and even with politicians, i.e. the Brown-Darling administration at the time. Junior bank managers do not have discussions with Gordon Brown, Mervyn King, and discuss whether or not they can legitimately mess around with the LIBOR. That decision had to be taken by somebody senior. I asked them the question tonight, who was it? And it is, as it's been for the last 48 hours, like asking children in a playground who's done the naughty thing. Nobody really wants to answer, and we're still waiting for an answer.
Right. Well, so are the markets, of course. Barclays shares went down some 15% today, closed down 15%, and the political response has been absolutely vehement.
Yeah, the normal choreography of this is outrage, and then you take a fine, you collaborate with the FSA, somebody gets prosecuted maybe down the line. And then politicians generally then stand up and say, well, we mustn't let this damage the status of the bank, of the City of London, and Barclays is an important institution, blah, blah. But instead, today, they said the exact opposite. They went for the jugular on Diamond and the Barclays senior management. We heard both Cameron and Osborne go for him by name. And I think the reason is pretty clear, that this is actually a systemic, reputational hit for the city. It's making the city and London as a venue for doing business very, very shaky. And there's worry throughout the industry about it. That's why the politicians have been so hard on them.
Paul, thanks very much. Well, so what exactly is going on at Barclays, and how did traders fix the interbank lending rate, LIBOR? Here's Joe Lynham's assessment.
Make no mistake about it, this rate-fixing scandal is going to hit the banking sector, starting with the Barclays chief, Bob Diamond, like a nuclear bomb. And it could prove as destructive to the industry as the financial crisis of 2008. Even though the collusion started in 2005, its origins can be traced back to 1987. Big Bang, as it was called, swept away the bowler-hatted brigade and opened up the city to the kind of world where laissez-faire ruled and markets would clarify, purify and often liquefy. The first wave of this nuclear bomb started, of course, with Barclays. Its share price was in free fall today as the extent of the problem dawned on the market, which also doesn't fancy the bank without Bob Diamond at the helm. The next wave is imminent. Barclays got a smaller fine yesterday, in return, no doubt, for squealing on other banks. Watch out, RBS and Lloyds. That makes the possibility of US-style lawsuits more likely, benefiting lawyers mostly.
One can see an outward mushrooming effect from this, that armed with these admissions from Barclays and the evidence that's been obtained from Barclays, for instance in emails, taped transcripts of conversations between traders, that a powerful case could now be built against the others. That, in my view, will concentrate the mind of the others, and they'll have a choice. Do we too come clean and get the discount for an early admission, or do we tough it out and try and say we weren't a party to this?
Then there's the long-term damage to the City of London's reputation. It's already been hit by scandals at AIG, JP Morgan and UBS. Will it still account for 10% of British GDP in a decade? The wider economy won't escape either. This scandal will almost certainly lead to tighter rules for banks, which means they will earn less profits and lend even less money to companies and consumers. And even though this scandal is not restricted to just Barclays, it's the Bald Eagle Bank which is in the firing line when a UK Prime Minister arriving at an EU summit suggests that a banking boss has serious questions to answer. It's just a polite way of saying go, and go now.
I'm determined we learn all the lessons from what has happened at Barclays, and as I've said already today, people have to take responsibility for the actions and show how they're going to be accountable for those actions, and that's very important. That goes all the way to the top of that organisation.
Other Tory MPs weren't as polite, calling directly on Diamond Bob to resign, and the leader of the opposition said it was time white-collar criminals went to jail.
Well, I do want to see criminal prosecutions, and I do want to see those who've done the wrong thing, those who've committed what I think are atrocious acts, brought to justice.
We paid £2 billion in tax.
Things stepped up a gear today. Bob Diamond confirmed that he will appear before MPs on the Treasury Select Committee in the next fortnight, just as he did last year when he said banker bashing had to end. He'll be joined, no doubt, by his chairman, Marcus Agius, seen here on the left, who was running the board at Barclays at the height of this scandal, and his head may also be on the chopping block. And today also saw the British Bankers Association, under whose auspices LIBOR rates have been set for 3 decades, calling on the government to assume responsibility for them in future. Meanwhile, the FSA is said to be in talks with big banks on a financial settlement for small firms in particular. The city watchdog is also set to announce tomorrow a new mis-selling probe into the banks, which would sully their reputation even further. At the moment, there's something of an omerta going on between the banks as they lift up stones in-house to see what their traders may or may not have been up to, and more importantly, whether the regulator has any evidence of it. That means banks are looking nervously at each other to see which one breaks rank first and leads to a settlement, making the PPI payouts look like pocket money. And tonight it's increasingly obvious why this scandal happened in the first place. Investment bankers who gamble with much larger sums are allowed practice with a lower set of ethical qualifications than those who deal with the general public.
If you're in the retail sector or if you're a member of this institute, you'll take an integrity test. We actually have something that helps people understand what is integrity and how they can prove and demonstrate with it. There is no such requirement in the wholesale market. What we should be doing is applying the same principles that are now applied in the retail sector to the wholesale sector. Make sure that professional people belong to a professional body, abide by that code of conduct and take integrity properly and for what it's worth.
And this led to the kind of unethical behaviour at the heart of this scandal. Here's a graphic I prepared earlier. John and Simon work at separate parts of the same bank and should never be in contact with each other professionally. John has made some big bets on the future movement of derivatives linked to the LIBOR rate. He needs that rate to go down. John illegally contacts Simon, a colleague whose job it is to help set the LIBOR rate. Simon is supposed to ignore all communication from John, but in this scandal he doesn't. At the daily LIBOR fixing session, Simon suggests a lower interest rate than he should, knowing it will help John as well as the bank. Even though it may only work for a few days a month, even the tiniest changes can be worth millions to John and billions to the bank. We'll never know exactly how much profit was made or losses minimised as a result of this price-fixing debacle, but the fallout will doubtless mean that things in the banking fraternity are unlikely to be the same ever again.
Joe Lynham, well, the Treasury Minister, Mark Hoban, is with me. Is Bob Diamond a fit and proper person to run a major British bank?
Well, I think Bob Diamond has some questions to answer. We need to understand why this happened, why it wasn't identified by Barclays' own staff, and what's changed in Barclays since this happened. What changes happened in procedures? Has the compliance operation been beefed up? All these questions need to be answered by Bob Diamond, and that's why I think it's important that he's going in front of the Treasury Select Committee in a few weeks' time to do that, so we can hear from him what's changed.
He can run a major bank for the next couple of weeks. Somebody who either he knew what was going on, which would be absolutely terrible, or he didn't know what was going on, which would be presumably incompetent, wouldn't it?
Well, that's why I think we need some answers from Bob Diamond. Barclays did identify this. They did raise it with the FSA. So what we need to do is get some answers to this.
But you're prepared to wait, Minister, for the Treasury Select Committee to have a chat with them in a couple of weeks' time? I mean, you presumably meet these people all the time, don't you? I mean, you've met Bob Diamond, haven't you?
I have. Gavin, this is
would you, on the basis of what we know now, be perfectly happy to trust him with running a major British bank?
It's very clear, as the Prime Minister said today, that Bob Diamond has some questions to answer, and we should get those answers from him. And also, there are other banks involved in this. This is part of a long-running investigation, and we need to get to the bottom of this. And what we need to do, what's happened...
Why can't you just say
Gavin,
what some of your Conservative MPs, a number of Conservative MPs, whom I presume you respect quite highly, have said this man should just go?
But the chairman of the Treasury Select Committee has invited Bob Diamond in front of his committee to answer these questions, and we need to get some answers. What is clearly identified, though, is there's a gap in regulation. The regulatory system that Ed Balls designed meant that LIBOR wasn't regulated, and there were no criminal sanctions in place. And we need to resolve this.
There's no doubt all kinds of gaps.
But
is this a regulatory lapse or a complete moral lapse, that there is something absolutely rotten somewhere in Barclays Bank?
Well, I think there are two issues. First of all, what happened in these individual banks, and how do we get to the bottom of that? But also, why is it that this area of market activity wasn't properly regulated? It was a gap in the regulatory regime that we inherited from the Labour government, and that we are seeking to close. And we said today, House of Commons, George Osborne said, we will regulate LIBOR to look at what needs to be done, but also ensure that criminal sanctions put in place for this sort of market manipulation.
Right, but, the chairman is in charge of corporate governance. That's why I have chairman. So should Marcus Agius think of going? Because clearly nobody was at the helm here.
I think the answer, Gavin, is that we need to get to the bottom of this. There are questions that Barclays need to answer. The FSA report takes us so far, but the things clearly went astray in Barclays. We need to know why that happened, why it wasn't picked up sooner,
right?
And what's changed.
You made that point very clear on that. Would you like to see criminal prosecutions? Because fraud is fraud. I mean, there may be no specific offence that you can put your finger on that was mentioned in this, but if people have been cheating and fixing rates, that is presumably potentially fraud, isn't it?
Well, I think the hypocrisy of the Labour Party today has been calling for criminal sanctions when their rules didn't actually allow.
But you can do the political
so what we need
points
to do
going,
then,
Minister, if you'd like. But this is the worst abuse of trust in a British bank in living memory, and I'm asking you, as a Treasury Minister, what you can do about it.
Well, I think what we need to do is there's action going on both within the individual banks, looking at individual people. The FSA haven't completed their investigation, not just of banks, but of individuals. But we also need to look at every angle possible that we can take criminal action where where fraud has been committed.
So you would support the potential for criminal action? You think that would be a good idea if there was found to be fraud committed? You're clear on that, yes?
Yes.
And bonuses should be clawed back from some of these people?
Yeah, one of the changes we've introduced is to ensure that bonuses can be clawed back. In the past, bonuses were paid in year, in cash, could never be clawed back. The rules we've introduced enable those bonuses to be clawed back, and I think that's the right thing to do.
Do you worry, the overall point, the reason why so many people are so concerned with this is the very reputation of the City of London, is it not, is at stake here?
No, I agree, and that's exactly why
you agree.
We've taken action since we came into office to change the regulatory system in the UK, to put the Bank of England in charge of prudential supervision of banks, toughen up the rules, give regulators more power to enable them to intervene quickly and not allow problems to fester over a long period of time. We need to do that for London to maintain its reputation. London is a big employer.
Right.
2 million people are employed in financial and professional services across the UK. We need to sort out this issue so London's reputation remains strong.
Indeed. And are you worried that we ain't seen nothing yet? In other words, we've already heard that RBS and HSBC are the subject of some inquiries, that it could be much worse.
Well, there are inquiries on both sides of the Atlantic into a range of banks. And we need to get to the bottom of this. But clearly Barclays is the first situation where findings have been announced.
And do you think that the people in charge of the banks in Britain act morally or simply in their own personal interests? In other words, is there a greed culture which needs to be addressed?
Well, I think Alistair Darling mentioned it today in the House of Commons. He said that in the run-up to the financial crisis, there was a culture of anything goes. We saw that in the way in which the LIBOR was being manipulated. We saw some of the huge gambles that bankers took in the run-up to the financial crisis. We need to tackle that. That's why we're reforming regulation. And that's also why we're going to separate retail banking from investment banking through the ring fence that we announced through the Vickers report. We're taking action to sort this problem out.
OK, Minister, we'll leave it there. Thank you very much. Now, Samuel Beckett's great play, Waiting for Godot, was once described as a piece of theatre in which nothing happens twice. While European summits are much better